Hello, everyone. This is Puneet Bhargav. So let's get it started. First of all, thank you, everyone, for making time for this conversation. I promise it will be a very educational as well as interesting to have information for you guys to go through this. Um, so from an agenda standpoint, let's move to the next slide. There are three things that we intend to talk about today. Great, let's get to the next slide, please. So from an agenda standpoint, we are looking at covering three primary things. First one is around the background of the company. How did this company come about? What is the charter of our organization? What are our core values? And then we will get into the details of the opportunities, if you will. Next slide, please. So talking about the topic about, the dream of owning the real estate, right? Most of us, as we think about real estate, come across as something that's very intimidating, has a lot of hassles, has a lot of things to take care of. And part of that is, a mental block that prevents people from even venturing out and even thinking about getting into this space. So what we at US Rain want to do is remove those barriers, remove those hassles, and help folks get to a place where passive income for them becomes a reality, where building generational wealth is a topic that they can actually imagine and look at. And not only that, as part of this real estate investment, having a contingency fund and having an income in retirement are goals that many of us have, and we want to make it real for our investors. So let's look at, how did this journey start? Our founder, Mukesh Goswami, who happens to be on the call as well, and he will come online shortly, started this journey many, many decades ago as a passion and as a hobby for himself. And over those decades, the reality is he has multiple properties, double digits, that are in 10 plus states. And his experience in this space has been that he has a return of approximately 2.5x in an average 3-year window. And the tax-exempt cash yield has been more than 15% per year. So as Mukesh started this journey, he was thinking, okay, how do I grow the business? And for himself, that idea of the business had not been born yet. And through the process, he perfected this model that he calls the growth engine, right? And that development of that growth engine has actually led to the creation of this company called the US Rain, and hence here we are. Mukesh has been a tech geek throughout his life and has been a founder of multiple other startups as well. And his philosophy is that real estate investment doesn't need to be in the city, in the town where you physically located are. So how can you democratize investment? How do you become a remote investor in a diversified real estate portfolio and get to all the financial goals that I talked about in the previous slide? And from a growth engine perspective, essentially his engine has three main parts. First of all is the efficiency in operations through integrated processes. The second piece is around using a smart technology, which I'm sure all of us have experienced and seen the advancements, including generative AI, in almost every space. So he's applying those kind of fundamentals into running the business efficiently, number one, and number two, from a market acquisition and target acquisition standpoint, applying those technologies to be efficient in developing the pipeline of acquisition, if you will. Moving on, so like I said, that's how US Rain was born. So from a founder's perspective, this was a giant leap for us to form the US Rain. Essentially, when Mukesh stumbled on this idea through his experiences and developed this and nurtured this, um, we were basically four other friends that were closely looking at this space as well, equally passionate about it. So the five of us banded together, took Mukesh's idea, and formed the US Rain Company. And through our collective wisdom and pool capital, we said, how can we, again, democratize this space so that it's not just the five of us, but many other folks that can benefit from our experiences, from our learnings, and from the growth engine that we have created. And the goal was, obviously help folks generate passive incomes, bypass their W-2 dependencies, if you will, from an income standpoint, create generational wealth, and provide the folks the freedom to retire on their own terms, which many of us, dream about. And what this company offers now is a unique opportunity to you as an investor to join our team as an investing owner. And I'll talk a little bit more where the ownership part comes in and how you can be an owner in this journey. Before I get into that, though, there are three core values that are very near and dear to our hearts. And those core values are: honesty is number one. We want to be extremely, extremely honest in our dealings with the folks that entrust us with their capital. The way it manifests itself is us, basically walking the talk. So if we make commitments, we are committed to those actions and, honoring our commitments. The next thing is around transparency. So our commitment to our investors and co-owners is to basically have a full transparency on the operations, in our projections, and in our communications. And the last piece, which is a combination of honesty and transparency, is a commitment to the people, both inside the organization as well as outside the organization. Because we truly believe, the successful organizations are those that are founded on trust. And between honesty, transparency, and being empathetic to people's situations, we are confident that we will become a trusted partner of the investors. So let's talk about, the mechanics and how you can invest in this business. So we created US Rain Fund, a vehicle that is a means for you to invest a piece of real estate by investing with us, and that is without the hassles. US Rain Fund is a $25 million fund. It is targeted to incubate at least $100 million in assets for US Rain. In terms of the details of the funds, here are some highlights. We are focused on investing the capital of US Rain Fund in a high-yield, cash-flowing multifamily apartments vehicle. Our strategy is to acquire assets in growth markets, such as the major Sunbelt area, the Midwest, and other markets. And I'll talk about a couple of properties that we acquired recently in those areas and why they are so profitable. The second part of the highlight of the fund is that we want to create a diversified portfolio of properties across these different markets. And that is also a differentiator about our investing opportunity. Because typically most of the folks that are in this syndication model have a very defined real estate in which they request the investors to make the investments. Our philosophy is to distribute the risk and have a portfolio view rather than an individual property view. The other goal of the fund is to empower our member investors, right? If we grow and become profitable, our member investors will grow and become profitable and have, a means to achieve their generational wealth goal as well as, retiring on their own terms. And then like I said, the fund's competitive advantage is because of its proprietary and innovative next-gen growth engine, the RAIN growth engine. And that's a combination, like I shared, is modern technology, advanced data modeling, automated processes, and a cohesive ecosystem of operating components. From our growth strategy standpoint, we want to be $100 million business in assets under management, mid-size multifamily business to start with. We want to grow to a $1 billion business over the next 5 to 7 years, and then go basically faster and bigger from that after that. And this is possible because the rate of growth that the founders have experienced in their individual investment ventures, they have achieved quite a bit of success in that regard. So now let's jump into the RAIN growth engine and what it is. There are 3 parts to the RAIN growth engine: people, process, and technology. On the people part of it, we already have a network of vendors that we work with. And there are a couple of dimensions in the people part. So not only it's a network of vendors, we understand each other, we trust each other, we know our ways of working, we have robust contracts in place, and overall the mechanics of how work will get delivered, what kind of experience it will result in for the end investors, all of those kind of subtle nuances of operating a business like this are already addressed. Talking about the process aspect of it, I touched briefly on the automation, AI, machine learning aspects. Part of that is developing smart workflows. And for anyone that has been in the business space, the success of a business depends on how efficient the business processes themselves are that are employed in operating the business, right? So how do you make sure that the right information is in the right people's hand at the right time and the right action is taken based on all of those factors? In our case, it is the partnership with our vendors, number one. Number two, the automated workflows that we have mechanics like alerting, escalation paths, those kind of tools that make sure that the right action is taken almost immediately, if you will, without needing further escalations, causing delays, and subsequently a business impact, if you will. In addition to that, on the technology front, we also have a 24/7 command center. And the idea there is, again, using AI and ML to use as much of automation as possible and minimize human errors in the process and thereby gain operational efficiency. Moving to the next slide. So let's talk about how US RAIN manages its asset lifecycle. From an asset lifecycle standpoint, there are 4 main stages. We go from acquire to elevate to operate to liquidate. And typically this is anywhere between 2 years to 4 years type of a cycle on any given property within the portfolio. The acquire phase is highly strategic. That includes building a pipeline of target properties, applying our acquisition criteria to those properties, narrowing down the list, going through the inspections, figuring out the profitability. And once we are 100% convinced that this is a good investment, that's when we complete the acquire phase. From there, we move into our elevate phase. And the elevate phase, again, part of our acquisition strategy, we look at properties that are properties that can use a little bit of facelift, and because of that facelift, there's a jump in value. So as part of that strategy, the elevate phase not only improves the value of the property, instead it also helps us command higher rents, helps us get quality tenants, and also helps us get into creative revenue streams, as you will. In the operate phase of the life cycle of the asset, we again, as I mentioned in the previous slide, we again leverage technology, and through the cohesive network and automated processes, we have optimized how these properties are operated, managed, and maintained. And that also reduces our total cost of operations, boosts margins, and thereby revenue, and reduces expenses. And the last but not the least part of the life cycle of the asset is liquidation. So, like I said, somewhere between a life cycle of maybe 2 to 4 years, 3 to 5 years, depending on the property and the market, we look at determining from a bell curve standpoint, where does the peak value lie? So using our analytics tools, we forecast where the value is at peak, and that's the time, depending on market conditions and other factors, which are all, by the way, modeled into this analytics tool, predicts when is a good time to liquidate the property. On the U.S. REIN fund asset acquisition strategy, it's a 3 or 4 pronged approach on the acquisition. So part number 1 is we look at assets that are in landlord-friendly states, and where the property tax is low, the laws are landlord-friendly, and therefore chances of litigation, etc., settling in the favor of the landlord are higher, and so on. So that's part number 1. The second part of our criteria is looking at mostly Class A and Class B, and maybe some Class C assets. And what this selection helps us do is, again, command higher income and higher quality tenants as a result of that, with lesser maintenance on the properties. This thereby enhances our revenue growth and forecast, and also helps in introducing value-add amenities and services to our tenants. So, for example, covered parking is an example, free internet is an example, and those kind of amenities basically attract tenants that we can command a higher value from. The other part of our strategy is around aggressively pursuing distressed and underperforming assets. And why we go after that is because sometimes, because a property is not run, managed, operated efficiently, it is not profitable. And again, back to our growth engine, and within the growth engine, our optimized operations, we basically boost the performance of the asset by fixing low-hanging fruits from an operational standpoint. And that, again, boosts the NOI, if you will. And then from a asset value standpoint, given where we are in the journey, right now we are targeting properties that are mostly $10 million or less in price. Our average rent in the properties is north of $1,000 plus, most likely in the $1,200 to $1,400 range. And we look for properties that have an occupancy of 90% and higher. Another key item that I didn't mention is around assumable loans. So we also look for properties where the loan is assumable, given how high the interest rates are right now. The assumable loans basically increases the buying power for us across those properties and increases our selection of the target acquisition. Okay. What you see in the slide in front of you now is the assets under management. So like I had shared at the start of the call, we recently acquired two Class A properties. It's both of them combined have 36 doors on there, Crystal Towers and Florence Towers. They were fully renovated in 2019 and 2020. You guys will see the picture very shortly of these properties. And some of the highlights of why we acquired these two properties in particular were their ease of access to a highway in St. Louis, number one, and then their access to offices, proximity to downtown St. Louis. And all of those factors combined with the occupancy rate, the renovation that they went through, and the type of rent that they were commanding led us to the decision to acquire this property for a price of their current value, not for the price of, but their current value is $7.2 million. And overall, because of the acquisition, the value of the property has gone up, number one, and we'll talk a little bit about that in terms of the what does that mean for the unit price of the US Rain Fund units, and so on. What you see now on your screen is a picture of Crystal Towers building. And then the next slide has picture of the Florence Towers. And as you can see, the condition of the properties is fantastic, and why it's a Class A property, if you will. Moving on, so as part of our acquisition step, the other thing that we employ in acquiring our properties, not just using third parties, instead we have our own folks on with boots on the ground that go through a due diligence, physically being at the property, inspecting the property, and making sure that it is a solid and sound investment. And that's what you see in the picture on the left-hand side on this particular slide. So now we are ready to dive into the details of the U.S. Rain Fund and what that is. Before I get into the details of that, I do want to call this disclaimer out that what we are talking today is not an investment advice. We are not a broker dealer. We are not registered with the SEC. Our PPM is registered, but we are not. And the investment decisions are yours to make. That said, we will provide all the information you need to make an informed decision, and that's what we are going to share in the next couple of slides. So back to the fundamental goal of financial empowerment. From a driving value for an investor's standpoint, what this offering is, it is an opportunity to buy membership units of Class A or of Class B within US Rain funds. So I'll say that again. This is an opportunity to buy membership units of Class A or Class B within the US Rain fund. And why that is important is, and I repeat it, is you will become an owner of this fund should you choose to invest in this fund. And what this fund is, it is a fund with a cap of $25 million, has 50,000 Class A membership units, has 175,000 Class B membership units, and I'll talk shortly about what Class A is, what Class B is. And the unit price of both of these units is now $105.09, 105.09. We were offering this at $100 a unit until we acquired the two properties. So thank you for to our past investors for placing confidence in our strategy. You now have, as an investor, a 5% increase within the quarter and return on your investment. And there is a minimum investment of 100 units. That's a requirement, which means you're looking at an investment of $10,509 total for the minimum investment. And then you can invest in increments of 10 units. Okay. So let's dive into the definitions of Class A and Class B and what that is. Class A is targeted towards investors who prefer cash flow and relatively reduced risk. So if you are an investor who prefers a regular cash flow, are highly risk averse, then Class A is for you. What Class A offers is about 8% preferred current dividend, which is paid quarterly. In addition, we anticipate providing a 3% common accrued dividend, which will be paid at the time of liquidation of your units. And then the last part is a minimum holding period of 2 years. So if you invest in Class A, you have a holding period of 2 years, and then the rate of returns are about approximately up to 8% preferred current dividend and up to 3% common accrued dividend. Now let's look at Class B. Class B is a mix of income and capital appreciation. If you are a type of investor that prefers to maximize returns over the lifetime of the investment, then Class B is for you. The beauty of Class B is, as a Class B investor, when we liquidate an asset that is part of the portfolio of this offering, you will get paid 90% of those profits is split across all the investors. So I'll say that again. The beauty of Class B is, as the real estate that the portfolio buys through this fund, and when parts of that real estate are liquidated, the appreciation of the value of that real estate, which is the profit from the sale, 90% of those profits are split across all the investors that are in this that are participating in this subscription offering. So that's one major highlight. The second major highlight is 6% or up to 9%. We anticipate, based on our models, we anticipate providing that kind of common current dividend. And again, that dividend will be paid quarterly. And these are forecasted numbers. The third point in here is we are targeting an annualized projected average return of 25%. What we also anticipate, and this goes back to the story I had shared about how this whole thing was born and how Mukesh is able to have at least a 2.5 times return over on average of 3 years and his investments. We anticipate the investments in this fund to double in equity multiple, at least over the life of the value of the investment. And then the last part is the minimum holding period is 1 year for Class B with flexible liquidation plan. I would also like to highlight here that the space is limited in both Class A and Class B and is offered on a first come, first serve basis. Okay. So couple of highlights on the offering. This is a 506C offering under Regulation D. What that means is that for you to be eligible in this offering, you need to be an accredited investor. And the way the SEC defines an accredited investor is you should have a net worth of over $1 million, excluding primary residence. That's criteria one. Or another criteria is you are an individual having $200,000 or more in individual annual income, or with your spouse having an annual income of $300,000 or more in each of the prior 2 years, and with similar income levels expected over the current year. And we have a process. If you are not aware of if you are an accredited investor or not, we do have a process and a guide on how you can go about getting your accreditation certificate. It's a fairly easy process. The second criteria around accredited investment is investment professionals in good standing holding the general securities representative license. So there are licenses. If you have those licenses, then you can be considered an accredited investor. Directors, executive officers, or general partners of companies selling the securities, that's another criteria. Any family client or family office that qualifies as an investor, as an accredited investor as well. And then there is a whole category of knowledgeable employees for the investments in a private fund that can be considered an accredited investor. Next slide, please. Okay, so a little bit more about the unique flexible liquidation plan. Like I shared, Class A members can hold or have a minimum hold period of 2 years. There is no liquidation in the first 2 years. However, 100% liquidity can be availed after 2 years of investment. And that includes the original investment amount plus the accrued amounts that will be returned. And then the Class B members, the minimum hold period is 1 year, no liquidity in the first year. And after that, it's a tiered model in which you can drive your liquidation. 5% of units that complete the 1 year of holding can be liquidated each quarter thereafter. 12.5% of the units that complete 3 years of holding can be liquidated each quarter. And then 100% of units that complete 5 years of holding can be liquidated anytime. Thank you so much for your time. And like Mukesh said, there are many channels through which you can reach us. Please let us know how we can be of help, and look forward to hearing from you. Thank you so much. Have a nice weekend.
Thank you, everyone.